What's going on, guys? Welcome to the Geeky Investor, where stocks talk and we translate. Today, we're going to show what's happening in Venezuela's war right now between the US and Venezuela and how is that going to affect the stock market, because that is our main focus right here. It's not politics, but it's how it's going to affect the stock market. So, before we begin any further, I'd like to show you what is really happening. So, the United States has launched military strikes in Venezuela with explosions reported in Caracas. So, for those who do not know, Caracas is actually the capital of Venezuela. And as you can see with the video right here, this is an official video, so now it's Caracas, Venezuela, and we can see, the bombs and the war is kind of, starting right here. And so how is this going to affect the stock market? So before I talk about that, so Donald Trump has actually, if you can see right here, so I'm going to zoom out a bit. So Donald Trump, the United States of America, has successfully carried out a large scale strike against Venezuela and its leader, President Nicolas Maduro, who has been, along with his wife, captured and flown out of the country. Of course, they haven't actually mentioned where exactly, but just to be discreet. So this operation was done in conjunction with the U.S. law enforcement. Details will follow. There will be news conference today, and so that is what Trump has been saying. So now if we go back, Venezuela has condemned the strikes and declared a state of emergency and called for mobilization. Now, why are we actually talking about this? Well, the idea behind this, if you zoom right here, so as you can see, this is the oil reserve throughout the countries, or actually just the top few countries throughout the world with the oil reserve. And as you can see, Venezuela has the largest oil reserve throughout the whole world. It's even more than Saudi Arabia, the United States, and Iran. And as you can see, this is a very large amount of reserve for the oil and for the energy throughout this whole world. So if Venezuela is affected, well, one would think then the energy sector would be significantly affected, which would lead to a lot of price pressure on the stock market, right? So, well, what is in reality is that Venezuela holds, as we were just saying, Venezuela holds the largest oil reserves worldwide, even more than Saudi Arabia, Iran, and the USA. Well, what we show here is that Venezuela actually only exports almost 0.8 million barrels per day exported, constrained by sanctions and by production, while the Saudi Arabia actually they export 6 to 7 million barrels per day exported, which is the world's top oil exporter. That is Saudi. All right. So basically, what I'm trying to say right here is that Venezuela is just that, although they have a very large reserve of the energy or the oil, to be more specific, however, they do not export a lot. It's just a very tiny, small export. The United States exports 4 million barrels per day. They are a major exporter, but also the United States is a large consumer. So even a 20%, we're making just a hypothesis here, if a 20% increase in the Venezuelan exports will barely move the global supply, because as you can see, 6 to 7 million by Saudi, the United States 4 million, and then you have these other countries, you can reach up to 20 to 30 million barrels per day. So Venezuela 0.8 is not really that significant. So if you can see right here, I'm going to be zooming. So as you can see on the chart right here, so this is the natural gas in EU, so in euros. So as you can see, in 2020 when the coronavirus, and then in 2022 2023 when the Russian-Ukrainian war has begun, and as you can see, the prices have spiked so hard that you can see it kind of more than tripled or quadrupled in price. As you can see, it was around 50 or even less than 50, but then it exploded to 350 euros at that time. Well, we can see that for Venezuela, it's not going to be that significant of an effect on the energy market, because as we just said, Venezuela only exports 0.9 million barrels per day, while the other countries export more than 6 to 7 million. Is just a small part or a small player within the overall market. And as you can see, maybe the stocks would be affected in the short term. However, in the long term, I don't expect this is going to have a lot of effect on the market, because we will see in just a moment that the stocks actually follow the earnings per share of the company, and the earnings per share will not be affected significantly by just a small kind of 0.8 million barrels per day for Venezuela, which is not significant part of the overall world export. So as we can see right here, this is the crude oil price on the official website, and we can see that the price hasn't really significantly changed. Although if you kind of follow up the news over the coming few days, maybe the oil price would drastically change. However, I personally think, at least for the long term, so within a year from now, and mark my word and go back to this video, within a year from now or more, I expect that this will not have a significant impact on the energy sector or the overall stock market performance. Because as we will show right here, I'm going to be zooming, so just look at this graph. It's really phenomenal. So in blue here, this is the performance of the S&P 500, and we can see that from 1970 all the way into 2018. And then in yellow, this is the cumulative earnings expansion. And as we can see, it kind of they are following each other. So the share price is following the earnings almost in parallel. And as you can see, the higher the earnings are, the higher the performance of the stocks. So that means if this Venezuelan war is going to affect the earnings of the companies, well, only at that scenario, well, the stock market will be significantly affected over the long term. Well, maybe in the short term, the news is going to change and affect the stocks. Maybe that is true. But over the long term, if that does not affect the earnings of companies, well, it won't really affect the prices of these companies over the long term. And I do not think that only because of 0.7, 0.8 million barrels per day out of a total of 20 to 30 million barrels per day is really gonna move the needle, in my own opinion. So markets tend to show stronger correlations over the long term, making broader trends more reliable when observed over the extended period. And short-term movements are often driven by stock-specific events, sector trends, macro indicators, and other transient factors, which is not the whole story. And the longer the time frame, the clearer the market's overall trajectory and underlying trend, making long-term analysis more robust for strategic decisions. And that's why I am a long-term investor, not a short-term trader. And as you can see, this is the price, and as you can see here for the Euro STOXX, we can see that over the past 10 years, so the effect on the Ukrainian war, and as you can see, it just went in 2022 when the Russian-Ukrainian war started, but then it went back to that level within less than a year, and then now in 2025, 2026, we can see that the price has actually exceeded that significantly, which is what I expect for this Venezuelan-American war. So the situation in the EU provides a clear example of how short-term volatility can be more pronounced than the actual long-term trends, and that's why I believe the stocks will not be significantly affected by that over the long term, although in the short term anything can happen. Let me know what you guys think in the comments down below, and I'll see you in the next one.